All right, good morning, everyone. It is 8:34 in the morning of November 29th, 2022, and this is my pre-market strategy session. And so the title of the video today is what is it? QQQ Coiling, top of gap at 267.76. So here over the past few days, and what we've got is actually a bit of a bullish formation here. We've got a bull flag happening here. And usually the way these things resolve themselves is the way that they enter the flag. So we have this move up, some consolidation, and typically what you see is a move up from there. Now, under normal circumstances, I would call that a bull flag, and I'd be looking for the upside. I'd be looking for the breakout to the upside. But because we are in a bear market, we still are in a bear market. What I'm looking for is a breakdown of this formation, and I'm looking for it to go back down here. And I'm looking for it to bounce to find some support right around this area, this 267.76, and then move to the upside. If it does that, if it does make that formation, then what we'll have here is if it bottoms out right here and moves forward, moves up from there, we'll have a third lower new higher low. Here, let me get the volume out of the way so it's a little bit easier to see. So we'll have this low, this higher low, and if it can get down here, back down to the top of the gap, this is the top of the gap that happened between November 9th and November 10th. And if it finds support in here, then we'll have a new higher low, which will give us a little bit of a move to the upside. And really, the reason that I think that we are headed to the upside is because we're not ready to go to the downside yet. What I mean by that is the 10-year, 2-year spread, right? So here it is. The delta between the 10-year and the 2-year is negative right now, and it's in record territory. I mean, this chart only goes back to the late 80s. So if there's a deeper inversion on the 10-2 inversion, then I don't have it. I don't have that data. I only have the data that's on the charts right here, and this goes back as far as early 1988. So here we are. The 10-year, 2-year yield inversion has made a new all-time low in the history since 1988, at least. If it happened before then, I don't know about it. And the reason that I don't think that we're ready to really start the next big leg down on the equity markets right now is because the big moves down don't happen until the yield curve starts to normalize again. So here, the yield curve in 2006, the yield curve was inverted for about a year and a half. And then when it started to normalize in 2007, that's when we got the big leg down. That's when we got the real crash on the market. Same thing, 2001, the yield curve was inverted for about a year, and we got the big crash down. Back here before the 90s crash, there was an inverted yield curve, kind of flirted with normalizing there for a bit. But this action lasted for about a year and a half, and then we got the big move down after that. So, if history is any guide, then this inversion is only about 5 months old. And if a year to a year and a half of inversion occurs before the crash, the markets can remain bullish while this inversion is in place until the inversion normalizes. So we've got anywhere from 7 to 13 months before the real big sweeping down move in the equity markets happens. And while things are inverted like this, the equities markets can remain bullish. So for the time being, it looks to me like this move down, which has lasted for about a year, is just about exhausted, and I am looking for some movement to the upside for somewhere around 6 to 12 months from now, and until this yield curve starts to normalize again, we can see bullish behavior on the equity markets. Once this thing starts to invert or normalize and go back above zero, then I expect to see the equity markets really start to tank. So if the equity markets really start to tank from this point here, I mean, it's definitely going to be bad, one way or the other. No matter what happens, the next down leg in the equity markets after this yield curve normalizes again, it's going to be drastic. So as of right now, I think we're down somewhere around 30% on the Qs, and so to see the Qs move back another, let's say, 20% higher from here as the yield curve normalizes would set us up, for a more drastic move down. So I really am looking for some bullish behavior out of the Qs, especially at this time of the year. Between December and roughly March of every year, it's bullish. There's a lot of movement happening of investing for the year to come and so forth. So I expect to see bullish behavior for the short term at least. And filling this gap, coming back, this chart, this technical right here, from a technical perspective, is saying, hey, there's a gap that needs to be repaired here. I'd like to see it fill sooner rather than later. If we wind up breaking out above this, then eventually, and maybe it will be after the yield curve normalizes again, that we come down and fill this gap again. In the meantime, though, I'm looking for it to fill sooner rather than later. I'd really like to see that, because I think then I know it would be a great time to start playing the long side if we get support here and then break back up above this sort of this 292 level. So what happens exactly, I don't know. It's anybody's guess, really. This is just something that I'm looking for the time being. So I am looking for downside opportunities with this pattern, and then after it gains some support here, 267, and moves away from it, I'll be looking for upside opportunities. That's the long and short of it. We have the VIX. VIX is trying to bottom out here, and it makes sense that it would bottom out here because it would be a new higher low in this series of higher lows on the VIX. I think that for the Qs to break up above, then this would have to be the last higher low. So it's something to keep an eye on. You're not supposed to chart the VIX, but anyway, a breakdown below 19.12 here in soon after this gap fill would be nice to see. But in the meantime, for it to go down, though, the VIX is going to continue to go higher in the short term. So kind of a mishmash of things going on here, and we'll see how it goes. It's just a matter of sitting tight and doing what the market, interacting with the market according to how the market is behaving. That's it. That's all there is to it. So yeah, pretty much. Let's see. Gold is trying to put in a bottom down here and trying to move away. I don't know. Bitcoin is bearish, and it's in my opinion that we continue down here into the beginning of next year. We'll see this mid-February time frame right here. We ought to see Bitcoin breaking down to the 13,000 level, roughly. Otherwise, yeah, that's pretty much it. All right, everybody, good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. Thanks for tuning in. I am out.